Hello, everyone. Welcome. It's Ross from Hive Business again, and I've invited Simon, who's my tax expert colleague, here today because I wanted to talk about a specific element to help everyone out about saving taxes on incorporation. Welcome, Simon.
Thank you very much. Hi, everybody.
That's good. Right. Yeah. So the very specific reason, although we'll expand it as we move through. Essentially, you've done a lot of projects, and so I've been privy to kind of seeing a lot of clients who are still saving lots of taxes through incorporating their business. Now, I think we spoke about this so very much over the years. I thought it was almost an old redundant topic, but I think quite to the contrary. I think we've seen more in the last 6 months than we've ever seen before, haven't we?
Yeah, I would definitely say we've had. Oh, you're right. It is something we talk about a lot, consistently. The last 6 months, we've had so many new people approach us that just haven't incorporated, and there's kind of really no reason for it other than maybe some hearsay or some bad advice. So we're here to kind of try and help you understand what those reasons may be.
Yeah, so I think there'll be some technical aspects which you'll kind of run through for us in a moment. But I think we're really here to kind of dispel the myth that incorporation can't work for you. Is it even too extreme to say it can help everyone somehow, or is that a bit too far?
That's probably pushing it just a little bit. What I would say is I think we've seen one case in the last 2 years where we've said actually it's probably not worth doing. There's a few more kind of marginal cases where we've said, look, give it 6 months, but once you reach that point, it saves. Most people will be better off tax wise, and there's kind of non-financial elements to incorporating as well, which we might not touch on now, but might creep in a bit.
Yeah, okay. So if you don't currently have a limited company, or actually even if you're using your limited company not to its fullest potential, but certainly if you're operating as a sole trader, I think you're telling me there's a 99% chance we can save you a pretty reasonable sum of tax. Is that the deal?
Correct. Yeah.
So and we're not talking about insignificant amounts, presumably in each case.
Definitely not. No, I mean, we've done a lot of associates, helped a lot of associates incorporate, particularly in the last 6 months. I would say, the average kind of tax saving we're seeing is around about 20K a year, which is, phenomenal, really.
Wow. Okay. So, I mean, that can pay the school fees, buy a car, extra couple of holidays. It's not insignificant stuff in the slightest.
Really, really not. No, it's and without any kind of change to lifestyle either. So we're not cutting back what these people are spending. We're just accessing more cash for them.
Okay. So this is associate. Presumably you've also got similar kind of track record with the practices as well. It's the same concept, really.
Exactly the same concept. And again, tax savings are there or more, to be honest, for practices.
So what's happening then, as far as you can see?
A lot of the new people I'm speaking with have either been told it's just not worth doing, or they've not even thought about it yet. So I'm having a conversation with them about how we can help them out with their self-assessment tax, for example, and just kind of pointing out to them, you do realize you'll save a lot of tax by incorporating. A lot of them haven't thought about it, haven't been advised by existing accountants to do it, or have actively been advised kind of not to due to a number of misconceptions, I think. One of which is that you're not going to save anything. It's just not true. What I would say is in circumstances where you are spending every penny you're earning, you are not going to save anything, but most people are. And if they are, it's because they're spending it on a massive sole trade tax bill that will disappear. So
sometimes it can almost be a circular argument that they're kind of spending all the cash because they've got such a high tax bill. But actually, if you restructured it, you kind of reduce your cash requirements. So by virtue of itself, you save yourself some tax. Is it as nonsensical as that?
That's exactly what happens in a lot of cases. Another common thing we see is, oh, well, I do spend all my money because I put 3K a month into a savings account. So, well, that's costing you tax to do that. Not a lot of people realize that after you've incorporated, that could change. That in itself will save you tax.
Okay, so
Well,
it
so
can then boil down to what are you spending on, and can we structure that more tax efficiently?
yeah, what we look at with people is how much income are you generating? What are you as a household consuming that on? How much of that could be altered without restricting spending? You know, we're not here to stop you having the lifestyle you've worked hard to build for yourself, but can we do it more cleverly with the company and save some tax as we're going about it? And most times the answer is yes.
Yeah, okay. And I think that's a really important kind of thing. We talk about it actually when you're running a business, in terms of how well you can get your business to perform. But it works, in my experience, equally as well in tax saving, that we have to. I think it's natural that we want like one or two big things that we can change, and it makes this great big sweeping difference to our business. But in reality, again, certainly when you're running a business, you have to look for all those small percentage points and all those small victories, and the small ones do add up to what can be a considerable outcome. So that's in the context of running a business, but same holds true with tax.
Yeah, I mean it comes down to grabbing all the percentage points. So, like I say, for many people, if you are spending everything you are earning, you will not save any tax by incorporating. So it's not a kind of one size fits all solution. If you're not going to be clever about it, if you stop there, it doesn't work for you. But you don't need to stop there.
Okay.
You can layer in the extra levels
So you
and
can be still spending the max amount of cash, but basically you can adapt it so that there's better outcomes.
yeah, definitely.
Cool. Can you give us an example, like during an acquisition? Is that equally as relevant for limited companies? We do see that a lot as well.
Definitely, yeah. I mean, if you're purchasing a practice, whether it's already trading as a company or whether it's someone selling their sole trade or partnership, there's almost no excuse not to be using a company to make that purchase. Now, I haven't personally come across a case where this isn't true, so I'm going to kind of state this, but most people, every case I've seen, you will pay about twice as much tax repaying debt as a sole trader than you will as a company. That's before you even start to look at, okay, well, am I actually better off trading as a company? Again, the answer is often yes. Just by having a company, you are halving a portion of your tax bill when
Wow.
buying a
Okay.
business.
So when you're buying a business, you've got to use a limited company to buy it, in
Mhm.
your opinion.
Yeah.
Yeah.
Um,
Well, it's pretty clear cut. But still plenty of cases where you don't see that, presumably.
yeah, I spoke to a chap a while back. Um, kind of sticks in my mind because I could demonstrate to him a 250k tax saving across the next 10 years, and he was resistive to it because his existing advisors were saying it's not worth doing. Which, tax is what I do. I can kind of see that it's a relatively straightforward thing to go ahead with and a guaranteed outcome. It's just not attractive enough
Not
for whatever
resonating.
reason.
What's happening then?
Yeah.
Is it kind of is it is it a communications breakdown, do you think, somewhere? Or
I think it is, yeah. I think it's, current advisors not looking at the full picture. So people who are with another accountant, not every other accountant, but we come across the odd case here or there. They're not looking at the full picture. They are assuming that everything is coming back out of that company, and therefore there is going to be no tax saving, which is correct, but an incorrect assumption to have based that conclusion on.
okay. Well, okay. I mean, yeah, it's becoming quite clear to me what's the whole purpose of this debate here today. Really, are there any other kind of myths that you hear from kind of advisors or clients actually saying, well, I've heard this, so therefore I don't need the additional complexity of setting up a limited company?
Yeah, there's a couple of other really common ones. One is I've got debt already, so I can't incorporate because the bank won't let me. That's probably not true. I guess the situation has changed ever so slightly over the past few months with interest rates now being higher. So we would need to look more carefully about renegotiating any debt. But there's often still tax savings that far outweigh any extra debt cost. But again, that's case by case. The other big one is I've got an NHS contract. The NHS won't let me, or they'll force me to renegotiate my UDAs, or they won't even look at it for 6 months. So I won't get an answer from them for 6 months. And all these things are potentially true, but there's more than one way to go about this, and there's not always a need to involve the NHS.
Well, okay.
So I wouldn't just assume that you have an NHS contract you can't incorporate. It's actually not true at all.
Yeah, so quite almost to the contrary. If you are sat there sole trade with an NHS, with a very large tax bill due to be paid in January, it's exactly you that we're speaking to. Is that fair?
Yeah, I mean, you can incorporate. There is never a set of circumstances in which you cannot incorporate.
Wow. And what kind of savings are we talking about for the average practice owner, would you estimate?
I mean, we're seeing an average of 20K per year for associates. It's kind of there and up, to be honest. The biggest we've seen, I think, well, not the biggest, but 50 or 60K doesn't go unheard of per year.
Wow. Okay. And is there any penalty to be paid here? Every now and again I've heard that, well, I might save some tax now, but I just pay it all back at the end when I sell up. What do you think?
Not really, no. I mean, when you sell up, yes, there's capital gains tax to pay on selling company shares, but that's in the future. We don't know what the tax rules may be when you get there. If you were to sell up under today's current rules, you'd still pay tax on selling, but you'd pay tax on selling your self-employment anyway, your sole trade practice anyway.
Yeah.
So generally speaking, no.
Well, actually, I was just thinking then of a particular case you're looking at now where almost the contrary can work. You can end up with a zero tax sale if
it's structured correctly. Yeah, there's more than one way of doing almost everything in tax. Even when you know when you're starting and where you're ending up, there's often more than one way of getting there. And one way of exiting the business with a limited company results in zero tax.
Not possible under sole trader status.
Not possible at all under sole trader status, and unless you're selling for a loss, which is not the outcome anybody wants. So,
no. And when we talk about sole trader or partnership, same thing.
Partnership, yeah, same rules.
Good stuff. Okay, so we've swept aside a bit of the complexity with NHS. That there is more which I'm kind of mindful of. But again, it is in the same kind of theme of we've got to kind of forage around. Is this a really complicated process then? Because I can imagine pretty daunting for the average, whether it's dental associate or dental practice owner. Is this a long, laborious process for them to try and harness those savings?
It's not, no, it's a process that has to be done in the right way, and the right way is different for everybody, but that's our role in this. So, it starts with something as simple as a phone call to us to help to understand what your savings might be. We can then take you through each step, whether it's, actually a little bit of input is required by you at this point, or your practice manager could do this point, or look, we've got in-house expertise that can do the next bit, and then this third party we work with who can do the next bit. It's all about deploying the right people for the right thing, and keeping the task as straightforward as possible for the dentist.
Yeah, okay. So and you can reach a pretty reasonable conclusion fairly quickly to a certain extent. It doesn't end the process, but you can tell them what the benefit will be.
Yeah, we're able to give an indication of tax savings with as soon as we've got an understanding of what you're bringing in and where it's going. That gives us kind of everything we need to advise you whether to get started, and we've got the tools to collect that information from you with very little input. So what I would say is, let's have a phone call. We can probably get what we need from you over the phone, and talk you through what the savings might be.
Wow. Okay. So just to be clear, it's fairly straightforward for you to evidence the savings to someone. There are, there are a lot of myths about incorporation out there, but not many of them hold water as far as you're concerned. So I think if you're getting the whisper of a feeling that, or certainly if you've got a feeling you've got a massive January tax bill, this is exactly intended for you, because you might be being fed the wrong information, might be being fed the wrong advice. But I think if your instincts are there, that if you're hearing any of the content that we're talking about today, these are the myths that are entirely entirely applicable to you, and that there are workarounds.
Yeah, well, we'd be happy to speak to anybody who is not incorporated, whether you've been told not to or haven't been told anything. I think there's almost no stupid questions in this field. So I'd speak to anybody who is still self-employed.
Great. Well, look forward to any inquiries. Anyone wants to make contact and talk to Simon about how he can probably help, and give us a call. Thanks for viewing today.